Welcome to the November 23rd, 2020 Advance Report from McGowan Group clients and NetWorthRadio.com listeners. I'm Spencer McGowan, your financial weatherman. Thank you for joining us this week. I'm president of McGowan Group Asset Management, the team that cares, based in the Crescent in Dallas. And each week, your fast-paced tour of the global financial markets. This week, we're focused on the top surprises of 2020 and the top potential surprises for 2021. With a month left to go, we're grateful, I think, that 2020 is over, and happy Thanksgiving to you and your family. And we want to set the stage for peace and prosperity in the year ahead. To cover the biggest surprises of the year, I'm going to go through the charts and graphs in a quick, rapid sequence. So if we take the Dow in 2019 starting, we're starting in January here on this chart. It's year to date. We can see the pandemic. So coronavirus, obviously the top surprise of 2020. This is an absolute panic. It was a deleveraging. You had heard about the repo markets in December, the Fed's putting money where? Well, that was an over-leverage trading for a lot of high cash flow assets, and there were hedge funds that had borrowed too much money, and they exacerbated that quick sell-off. The rebound was another surprise in 2020. The Fed infusion tends to help the market rebound, and then you have a lesson, a potential surprise for 2021, and even 22-23 mirrors 2010 through 2012, and that is you had a range-bound market. In other words, a market that doesn't make much progress because technology, arguably the overpriced sector, makes up such a huge component. Even in the Dow now, they added Salesforce this year, dumped AT&T because they keep making mistakes, but in this case, a lot of this was driven by technology, and if the air comes out of that bubble, then you've got a range-bound index. So indexes may not make very much money, and I'm going to cover something about 2021 that may also surprise you about fixed income allocations. What may work the best and what may not. Here's the S&P earnings. There's the virus taking over with the shutdown, and then this rebound in earnings, this was a surprise that we see in raising the forecast, but we're not back to even yet, and this projection says it's really not until the middle of 21 that you even have that potential. I think that's probably a little bit optimistic. This would be a huge surprise to have a new high in S&P earnings in 2022. I think that's a little too optimistic, and I think we may have a solution based in cash flow that's a little better than just relying on the earnings forecast. In any case, surprise number one, GDP goes down 31% in a single quarter annualized. Here's the biggest surprise, it rebounded by 33% in the third quarter. That's huge. It recovers most of what it gave up. People figured out how to operate. Companies figured out how to operate remotely. And because of the infusions, both stimulus and the Fed, you got a nice rebound. This next quarter, also surprised, 4%. And then about a 3% projection for all of next year. These numbers have been a little bit adjusted, but I would say there's more to come with the vaccines rolling out. And one of the surprises of 21 is by the second half, you may have enough inoculated or vaccinated that the coronavirus disappears as the primary topic on social media and other media. All right, now, what's the damage this year? Minus 3.6. What's the forecast for next year? 3.8. That recovers the economy to 2019 levels or a little bit above by the end of next year. That would also be a surprise based on how we were feeling and what we were seeing in March and April. Here's the interest rates. Surprise, the Fed acted quickly. They took the short rates from 1.5%, that's the T-bill, down to, well, it actually went negative briefly, but they set a target of 0 rates. Everybody bought T-bills and pushed the rate negative. Wow, that's the first time we saw negative treasuries. What's another surprise? The 30-year Treasury, right now at 1.5%, the T-bill's at 0.06. The 10-year Treasury still just 0.85. All the cheap housing, because mortgage is key on this number, cheap housing caused a surprise housing boom for 2020. That was a big surprise, that the housing never missed a beat and actually went higher and set 14-year records on stuff. In any case, it was cheap money driven by the cheap mortgages. Here, rates projected to stay near zero, the Fed said, through 2023. Here we get to another potential surprise for next year. With 0% interest rates, anything paying over 5% could get a huge increase in value next year, because if you're getting zero in a money market, you're saying, what else is out there? That money flow has already started. Here's the quick recovery in high yield, and we're starting to see the high yield not just competitive with the Dow, but the yield on top of it. And that yield could become very attractive from the high yield sector. It may get a premium. Here's something else on a potential surprise. We got a 20% spike in the energy infrastructure pipelines. They stayed low because of lower demand. The end of the coronavirus could lead to an energy shortage because a lot of the production has come offline, and there may be more regulation on oil and gas. Last time that happened was 2010. What was the big surprise? In 2009, Obama administration did not like oil and gas, put on a bunch of restrictions for new supply. Boom, oil went to 110. That was an energy shortage that kind of brought back some inflation too. But the pipelines after the election, there's a surprise, up 20% in 2 weeks. All right, now, this is natural gas. Demand was actually restored for natural gas very early. That was a surprise. And with liquid natural gas exportation, you're likely to continue to see higher pricing here. It settled back to about $265 per million BTUs this week. What's significant about that? It's bigger than the average price of 2019, indicating not only is it restored, but for some reason we're already seeing some inflation there. And that could cause the Fed to have to come off of the 0% by the end of next year. Healthcare, big surprise, Operation Warp Speed. And the end of the pandemic may be forecast in the current markets because of Operation Warp Speed, delivering 2 vaccines so far that are ready for mass distribution. And so Moderna and Pfizer, that was a big surprise. They came out with that just curiously after the election. But the healthcare sector, very much in favor. Warren Buffett bought 4 names. 2 of them are in the medical dividend space that we added to actually before him, which I'll just say that. But it's nice to have him come in behind us on the healthcare sector. Okay, this is one of the other surprises about high yield. They go down with equity. You can see 50% value at risk of loss here. Very quick recovery. That was a big surprise. And then a huge premium in 2012. If you reinvested high yield in these 2 examples, average return was 10% over this 5 years. The Dow didn't get back to a new high permanently until 2012. That's 2007. That's the 2008 crisis. 10% average return for that 5 years if reinvested, 14% because of the power of reinvestment while you're getting the cash flow, and you don't have to sell stuff, if it's down. But the high yield sector could get a surprise like we saw in 2012 when interest rates were near zero for an extended period. Then you have to start worrying about inflation, which is where the healthcare and the energy infrastructure come in to a well-balanced portfolio. I'm Spencer McGowan, your financial weatherman. Thank you for joining us today. We'll be back in 2 weeks, taking Thanksgiving off, and we'll have great updates for you after the Thanksgiving holiday. Be sure to share, subscribe, so you'll get alerts when we have fast-breaking news in the financial markets. Thank you for tuning in to our YouTube channel. I'm Spencer McGowan, President, McGowan Group, your financial weatherman. We sponsor each week networthradio.com broadcast. That has the charts and graphs, many of which you saw today. We also sponsor this YouTube channel. Be sure to subscribe for fast breaking news, an alert when we post something in a market condition that may have changed. Our goal is to help you as an investor make the right decisions at the right time. And that's part of what this YouTube channel is about, as well as networthradio.com. I am well served with a team of 10 people, including myself. And that team that cares is actually made up of people who devoted to your net profits and your success, as well as excellence in service. If you want an educational experience to follow this up, get to networthradio.com, the McGowanGroup.com. Right here, we disclose our net client experience all the way back to 2001. What that includes, the bear market cycles of 02, 08, 2018, and the recoveries through the most recent quarter. That is true education of investors and exactly how our clients have done, disclosed right here. Further disclosures, value at risk of loss. Yes, investments are going to fluctuate. That's part of the reason for this broadcast. And that can actually work to your advantage. We'll build that into your plan. So I urge you to go to networthradio.com, fill out the preliminary client questionnaire, a free 1-hour brainstorming session by phone or at the Crescent in Dallas, and we will map out a multi-year plan for you and your family that's appropriate. Just because we talk about a security on this broadcast or any securities doesn't make it a recommendation for your portfolio until you have that written plan. Thank you for tuning in today, and we'll be back next week as your financial weatherman.